Hey guys, welcome to Big Trends Monthly. I'm Josh Brown, and I'm here with JC Parets of All-Star Charts to break down the monthly closing candlestick charts to reveal the most meaningful market moves around the world. Just a quick primer, candlestick charting is hundreds of years old, started in the 1700s in feudal Japan. The rice markets, people saw the advantage of knowing the four most important prices of each day: the open, the close, the intraday high, the intraday low. So as each month comes to an end, we get new candlestick charts for the month in every asset class. JC is here to break down the most important things that he's seeing, the stories behind them. Let's take a look at this first chart you have here. Because I get your emails and stuff, and I read all, I read all your research. You seem to be really excited about this, and it's a long time coming, and the fundamental guys are excited about it too. But tell me about the technicals in this rotation.
At least somebody's reading my research, right?
No, I never miss it.
So this is really interesting because we talk about sector rotation, and what I keep hearing is that since over the last several months, money's rotated out of tech, money's rotated out of communications, out of consumer discretionary, right? You keep hearing that, but that's actually not true at all, right? Small cap tech, small cap communications, mid cap tech, all these things have been breaking out. So it's not so much that money's been rotating out of tech and communications and discretionary. Money's been rotating out of the mega cap names that just happen to be in those sectors, right? Okay. So this chart, I think, I get asked all the time, JC, what's the chart of the year? What sells the story of 2020 the best? I think it's this one. So here's what we're looking at. So on the y-axis, we're looking at the Q1 drawdown. So in other words, the higher up on the chart it is, the better it did during the COVID crash, right? The better it held up. So as you can see at the top, what do we have? We have large cap growth, right? Tech. The NASDAQ 100, all of those things. What do you have at the bottom? You've got mid caps, micro caps, small caps. They're the ones that got beat up the hardest in the first quarter. Okay, so that's the y-axis. On the x-axis, what do we have? We have the return since September the 2nd, which is the day the S&P 500 peaked, right? So the further to the right it is, the better it's done the last 3 months. The further to the left, the worse it's done. So as you can see, the names that got beat up the hardest in the first quarter are the ones that have done the best over the last 3 months, and the ones that held up the best in the first quarter are the ones that have done the worst over the last 3 months. So it's not so much a sector rotation, although we're seeing that too. It's a market capitalization rotation as well, which I think is incredibly healthy.
I think it's a combination of the vaccine drawing nearer and people just saying like, all right, where hasn't the money gone yet? What's the next thing? And I think a lot of people that missed the overall S&P bounce in the first half of this year, they need that next thing to make their full year numbers. So I think there's a lot of that beta chase going on, and where better to get beta? Mid-cap growth, mid-cap value, small-cap growth. So I think is a combination of where we are in the calendar and obviously getting closer to a reopening. So why do you think so many people were caught by surprise? Isn't this what always happens in a bull market at some point, that catch-up trade? Like, isn't this just like a classic feature of a bull market?
Yeah, Ralph Kapoor always says it. JC, sector rotation is the lifeblood of a bull market. And you could just add, JC's twist on that and add market cap rotation in there as well, right? It's all sort of a similar story. We could talk about how it's, interest rates, the biotechnology and financials have done well. They have much larger weightings in the smaller cap indexes than they do the large caps. A weaker dollar. There's a lot of reasons why we're getting this rotation. And by the way, it's not just in small caps. It's not just in sectors. We're seeing it internationally as well, which is the next chart here, which is Germany, baby.
Let's get into this.
Highs.
I have questions for you on this. All right, what do you want to tell us?
It's an all-time high, man. And what do we know about all-time highs is that they're not a characteristic of a downtrend, right? So this is just another one to add to the list, like, and another one, right? And that wasn't
Wait, was that DJ Khaled?
That was Biggie who said another one. By the way, you young kids.
Was it really? Biggie's another one was stolen by DJ Khaled? Really?
Because every time now a big index makes a new high, like an inside joke among us internally is like, Another one, right?
Yeah.
And then the kids are like, that wasn't Biggie, that was Khaled. I was like,
Oh,
bro,
shut up.
Biggie was saying that when Khaled was in diapers. Come on.
Okay. I vaguely remember that, but thanks for reminding me.
He made a song with R. Kelly that may or may not be safe for work, that he says it a lot.
Oh, okay. On the last
On the
album.
double album.
On the double album. Okay. So you have an all-time high happening here in arguably the largest and most important of Europe's stock markets, the continental.
Arguably?
Well, I guess definitely.
Yeah.
Okay. And you have a lot of, in the German stock market, you have a lot of financials and you have a lot of industrials. So it's very indicative of people betting on a global economic recovery. I know that's less important to you, but like when you see this kind of action, it's reminiscent of 2017, right?
I don't know about 2017. I mean, listen, it's hard. I mean, 2017 was a very unique year because volatility was so low. That was
everything went up.
Yeah, but it's really volatility was so low. I mean, that was the outlier. A more volatile year is more important. So what do I compare this to? I don't know, maybe the S&P 500 a few years ago, maybe, I don't know. All I see is we have broken out above those major highs, those former highs. We've consolidated above that. We've retested those former highs, and now we're ready to move on. And in a similar way, like you said before, it's just math. Like at some point, if the market's going to progress, if we're in a bull market, we're in a strong uptrend, and stocks as an asset class, small caps aren't going to be crashing down to new lows, right? It's just math. This is similar to that, right?
Yeah.
If Germany's breaking down and crashing to new lows, I can't imagine the rest of the world doing so well. Right?
So here's something on top of that. For the people that are like, oh, the market's so expensive, it's so overvalued. German stock market is 15 times earnings versus US 22 times, and it's a 2.7% dividend yield. So you're getting like triple the yield that you would get in just parking your money in bonds. Much more than triple if we're talking about German bonds. But you have an opportunity for upside. You have a lower valuation than U.S. stocks. All right, let's go into these European banks. These are like always a shit show. My entire life they've been a shit show. But you're showing me it looks like a false breakdown.
Yeah, and it's not so much that we want to go out and buy all these crappy banks. It's more from a risk appetite standpoint. Like if the world was coming to an end and these perma bears were actually going to be right for once, European banks would be front and center, leading the march down to zero, right? Like in the, like the marching bands, the girl with the baton in the front, that's Deutsche Bank.
It's called the majorette.
That's the one. That's Deutsche Bank. And the rest of European banks are right there. Like if the world is ending, this is the poster child. And the opposite is happening. They're actually squeezing. So for me, the evidence of risk appetite, I mean, they're buying European banks. I mean, look at the back of Kazakhstan, for goodness sakes. It has nothing to do with Europe, but I mean, they're buying, like they're really digging down. Did you see the monthly candlestick in Italy? Look at the Milano Bolsa. I mean, man, just ripper. And there's a lot of banks there. Banco Santander. I mean, these are the worst of the worst, and they're ripping, man.
You love to see it. And again, especially at this stage in the game. Let's look at these broker dealers and exchanges. What are the big names in this? This is like Schwab. Who else is in here?
The bottom line is this is in the Mount Rushmore of stock market indexes on planet Earth. You could probably add German DAX in that as well. This is the broker dealers and exchange index. Like, yeah, this has to be in the Mount Rushmore of indexes that any market participant needs to be cognizant of. And by the way, we're making all-time highs, the highest level ever for broker dealers. And now here's the caveat. It's the exchanges part that was pushing these higher. Look at
which
CME,
is what CME,
NASDAQ, ICE. It ain't Goldman Sachs. Right?
They've never done better. Like honestly, the combination of volatility this year, newfound interest amongst traders, options volumes, IPOs. Like it would be tougher to find a better business right now than a virtually running exchange like NASDAQ or CME. These guys are just killing it.
Absolutely. And again, it's the broker dealers and exchanges index, emphasis on the exchange. What Josh said at the beginning of this chart, I think is so true. What's in it? Dude, that's the top-down approach. So you see this ETF making new highs, go dive in, see what's in this thing.
So
go chart by chart. I promise you're going to get good ideas, probably in the exchanges.
there was a big upgrade for Schwab yesterday, and the next leg of this breakout in broker-dealers could be driven by rates. What they were basically saying, I'm not sure if it was Barclays or which firm, but they were basically saying, like, Schwab is poised to make a ton of money relative to everyone else when rates rise in the intermediate and long duration bonds, but the Fed keeps short duration at zero. That curve steepening favors Schwab more so than any other public company, because that's how they make their money. They're not charging you commissions to trade. They're hoping that your cash sweeps into one of their money markets where they keep all the interest. But that's a huge business. It's like $1 trillion business.
Yeah, and I think, by the way, I think that's part of the rotation into Europe and international. As the US dollar makes new lows, that's great for international equities. And then meanwhile, you have interest rates making new highs, which puts positive pressure on the banks, which a lot of these underperforming countries around the world have a ton of bank exposure. So that's just a really interesting phenomenon that all really fits in.
All right, let's talk about the IBB. Love this chart. These are the types of charts that I look for when, like, the ones, not that I look for, but when I come across them, like, these are the ones I get excited about. I like these consolidation periods that go on for years and then all of a sudden get taken out. It just, like, gives me confidence that, okay, it's a new uptrend. What are you seeing?
Well, it was a well-deserved consolidation. Look at what Biotech did prior off those '09 lows. I mean,
crazy.
Check my math, but it was one of the best performers of any group off those lows.
Celgene, huge moves. Yeah,
all these things. And this is the cap weighted. If you look at the XBI, which is the equally weighted, it looks even better. But anyway, so here's the IBB, 5-year base, half a decade of no progress, and we're just coming out. And what do we know, Josh? The bigger the base, the higher in space. And you know, to me, when I see exactly what you just described, like these big consolidations, that is increased frustrations from market participants in this particular market. In the case of Biotech, a lot of frustration to the point where, you know, if they can't, what did they say? If they can't stop you out, they'll wear you out. Brian Shannon always says that. So at some point, it's like, oh, the hell with it. This thing's never going up. And that's when it breaks out. So for us, we wait for that breakout. We got it. We've gotten the retest. We're making new all-time highs. I think Biotech needs to be a space where we have allocation. I mean, to nod, I think, is foolish.
You know what I love about this? The fact that the technical breakout is occurring at a very momentous time for the sector, fundamentally speaking. We have just had the equivalent of the moon landing for drug development. Literally, a vaccine that historically would have taken a decade has taken 10 months from beginning to approval. It's unbelievable. And the ramifications of that for the 10 or 20 largest names in this biotech ETF, I don't even think the market has processed what this means going forward for the timetable and the cycle of drug development to approval. We're not going back to the dark ages after what scientists around the world have just accomplished. So I love that this is happening in concert with that inarguably major development. Tell me about gold, because our tactical model has some gold. It really has been taking a break after a big uptrend. What should we be looking at here?
Yeah, so it's really funny because the next chart is Bitcoin and they look exactly the same. So we have been bullish in gold. We have been super bullish in gold, and our target was the former highs from 2011. Well, we hit those former highs. And what do we know? We know that in 2011, the market proved that just under $2,000 an ounce, there was an overwhelming amount of supply of gold versus demand for it.
That's where the sellers came in and the buyers got tired.
We know that. Like, that's not JC's opinion or Josh. Like, these are facts. So, okay, so now we are back to these levels after almost a decade. We're back to these levels for the first time since then. And what were we met with? An overwhelming amount of supply relative to demand. I don't think it should be a surprise to anyone. It has nothing to do with the Fed or Janet Yellen or the Trump or what COVID has nothing to do with any of that.
What's surprising to people is they look at this continued fall in the dollar and they're like, all right, why isn't gold doing historically what it's done? So is it a delayed reaction, or has that relationship changed? That's the question.
Price gold in euro. Price gold in euro and pounds and yen. Change the denominator if you have an obsession. Not you, but if you have an obsession with the dollar situation, just change the denominator. You'll see the same thing.
Okay. So now So Batnick would disagree with you here. This concept that there's any kind of memory in the price of gold, meaning
Don't
like,
have to call me. Are you kidding me? Batnick's going to disagree
hold
with me on
hold
that.
on. No, not in general on this very specific idea that the bag holders from 2011 now got back to the price that they were bag holders from, and that's the supply coming in. He would say 10 years later is too long to think that price still has memory, or that there are still sellers from that era who were waiting to get back to even. What's your take on that concept? Is it unimportant or?
Well, the market just proved that him wrong, right? Because we got back to those levels and the
It's
sellers
early.
showed up. So
it's early. All right. Batnick's gonna hate watch this later.
Hold on. So then here's the trade. So to Batnick's point, it doesn't matter. Listen, the point is there's more sellers than buyers at this price. These are just facts. So then we hit our target, we take profits. Now gold is someone else's problem. But when gold is finally able to surpass those former highs, that's the entry. Remember when we were talking about Bitcoin back at 10,000 and the trade was we want to be long Bitcoin if we're above 10,000? Well, that was our floor because it was a former ceiling.
What's your level on gold then? 2,100?
Yeah, 2,000, the former highs from 2011.
Okay, that's when the picture changes.
Yep.
Okay, let's do Bitcoin really quickly.
Same thing.
I'm sure people are hitting you up like night and day on Bitcoin right now. What do they ask you? How high could it go? Right?
No, well, I'm not getting calls from my high school friends yet like I was in 2017. When that comes in, now you know it's a fade. Feed the ducks. Get the hell out of the way.
People are pretty calm considering how much this has gone up.
You can see it in the Google searches. They're nowhere near as where even though price is back to the highs, it's nowhere near the Google searches that they were before. But my point here is same thing. As bullish as we were of Bitcoin, what was our target? The former highs from 3 years ago. Well, now we hit that target. So now it's somebody else's problem. Right. So like gold, and it could break out next week to tomorrow, never. Like I have no idea. So until we're above those former highs, somebody else's problem. Same thing with gold. Same thing with Bitcoin. I've got enough headaches in my life. I don't need another one. When these things break out, my little computer will make all sorts of funny noises, and I'll know that we've exceeded those levels.
Okay, so the gold and Bitcoin setups are very similar, and there's this really interesting debate. I don't know if it's interesting, but maybe it's interesting to some people about whether like Bitcoin is the new gold. A lot of the same properties in terms of it's not fiat currency. Nobody can step in and control it. But the major difference being like Bitcoin is way more portable. Like gold has like more of a historic allure, but Bitcoin you can actually, if you want to move it around, you can. It
doesn't matter. One's a useless rock. One's an almost useless currency. Both are speculation. Both are below overhead supply. There's no reason to own either, right? When we surpass the former highs and my computer makes the funny noise, then we'll get involved.
Love it. Where do we want to send people? We want people to go to All Star Charts and get these monthly charts. Plus, you guys are doing so much more these days. What else is going on in All Star Charts? Dude,
you don't even know. We just hired Rashmi Shastri from India. She's like, woo, she's a G. Rashmi Shastri. We just got her on the team. So if you're interested, obviously go to allstarcharts.com. What I'm going to do is I always come with some presents. I'm like Santa Claus around here. So if you email candles at allstarcharts.com, password monthly, put the password monthly. Otherwise, you're going to get some deck from India. Who knows what you'll get. So put the password monthly, candles at allstarcharts.com, and I'll send you a fun video.
All right, guys, we'll be back next January. Can't believe this is the last show of the year. Pretty exciting. Thank you, JC, and we'll see you guys next month.
Adios.